Yeah, I think it's been fun to see so many amazing people in the ecosystem across both Silicon Valley and MENA. So it's been fun. And Eva, you grew up in the Gulf, huh?
I did. Yes, I did actually. So I was born and raised in, well, I was actually born in Sharjah, and my family, sorry, I was just playing with my
No, that's all good. I felt bad because I was like, I asked the question just as she turned off the camera to figure out what it was.
I switched it back on, so we're all good. Firstly, hi everyone. It's great to be here. And just as a quick introduction, so I'm Iba Masood. I'm the co-founder and CEO at Tara AI. So I was born and raised born in Sharjah, raised in Dubai. My family's originally Pakistani, so we my dad actually moved to the Gulf a good 58 years ago now, and so he was actually 18, but he lied on his passport that he was no, he was actually 12, and he lied on his passport that he was 18 in order to get in and start working. So he built several small businesses and dabbled in jewelry for quite a couple of years. And so seeing him, I was pretty much set that I'm never going into entrepreneurship. So I'm not starting my own business. We just had so many ups and downs growing up financially that starting something or growing it was kind of furthest away from my mind. But what happened was I started programming when I was 6. And I think from there, everything just kind of opened this entire world for me, frankly. And I spent so many years kind of building these small communities online. Sayed was doing something very similar when he was growing up, my co-founder. But what happened was I remember dabbling in like MSN groups, and basically, I was the resident hacker in class. And so I was the one that people went to with like their computer problems, or I'd make some like money that way. And so, yeah, so we were born and raised there, went OG Dara. Sayed is from Lusace. But yeah, we've been in Silicon Valley just over 5.5 years. And yeah, it's and definitely missing home.
For sure. And then very briefly, can you tell the audience about Tara.ai?
Yeah. So at Tara AI, we're building a speedy Jira alternative that works for modern software teams. And so we actually launched last year in April, and we launched to about 50 developers. So there were 50 developers and 20 companies that were using us at that time in early access. And what happened over the last 10 months is we grew from 50 to now 25,000 developers on platform. It's being used in 6,000 organizations. And basically all of the traction has really come through developer communities, interestingly, and just kind of getting to page 1 of Hacker News multiple times. And so all of the growth has really been led through word of mouth. But in terms of what we're really building at Tara, we're building an alternative to the Atlassian ecosystem that is basically synced to Git. And so source control is kind of at the heart of it. And what it does is it presents these views to engineering managers in terms of release velocity, and developers use it because it's fast. And it very quickly gives you access to things like pull requests that are attached to your tasks. And the thing is, release velocity is really important for engineering teams, especially in a remote environment. Yeah. And so what happened with us was we kind of had this, we had 1,500% growth over the last year. We've brought on 20 new people to the team. We're still hiring. We have 6 new roles that just opened. So it's been pretty crazy, but I think overall we've been really grateful for the traction and kind of this bottoms up movement that's been spurred.
Awesome, and thank you for that intro. I'll go to Ahmed next at STV, and then we'll do Ahmed at Foodics, and then Awad. So just a quick, just for the audience, because I know we have some friends in the audience, but certainly people who may not know your story. So just very briefly, can you tell us about your story and just sort of Ahmed, STV, what does STV do?
Sure. Awalan, pleasure to be here, and thank you all for giving us the opportunity. My name is Ahmed. I'm an investment partner at STV. STV is an independent venture capital fund based out of Saudi. We started early 2018. Fund 1 is $500 million. We invest in technology companies, pure tech, pure software. We invest in companies that have a chance to become a unicorn from targeting the core market that is MENA. Some of our portfolio includes Kareem, where we invested about 160 million. Mersul Visita from Egypt, the trucker from UAE, the very great Foodics from Saudi here with us. And our portfolio spans logistics to cybersecurity, a little bit of B2B, and a lot of consumer facing. And the team at STV were all technologists by training. So myself, I was in Seattle and New York in a company called Algorithmia, a marketplace for algorithms, and early employee there. Same thing with my colleagues, former product managers or founders who've sold their companies.
Love it. And I will say Seattle versus Saudi, two very different geographies, at least from a weather perspective. I'll say that.
Only weather, yeah.
Yeah, and I'm in California. I always say Seattle, too much rain for me personally.
I agree.
I'm impressed you survived up there. Ahmed at Foodics, super thrilled to have you join us as well. Similarly, I think for the audience, people would be interested to kind of hear your story and your background. So if you could share a little bit briefly, that'd be phenomenal.
Hello.
We can hear you. Yeah. I think we're losing you. If you're on the mobile app, I would recommend you be on a computer, because I think the Hopin mobile app doesn't work super well for panelists. I can't tell if you're on your phone. All right, we're gonna jump to Omar, and
no worries.
We'll get hopefully Ahmed back.
All right.
So Omar, you're in DC. So
yes,
but you spend a lot of time in the region, Taiwan. So
yeah, absolutely. So for there's obviously some familiar faces in the audience. Iba, I know very well because we're seed investors in Tara, and we're super excited to have been on the journey since we met her back in late 2016, early 2017. But essentially, my name is Omar Darwaza. I grew up in Egypt. Been in the US now about 15 years. I'm a general partner at AAF Management, which is a firm I started with my partners in 2016, on the premise that we are the first GP LP structure to raise capital from the Middle East, North Africa regions and invest in early stage tech, right? So while most venture capitalists and funds that have been participating throughout the event are regional focused, our LPs are from the region, but our investments are all in the US. We're on our second fund, which we're actually closing up April 6th. We are also active fund-of-fund investors. So over the past couple of years, on behalf of several family offices, we've deployed about $20 million plus in other emerging managers in the US, Europe, Asia, and the Middle East. And we found that strategy, builds a massive top of the funnel pipeline for us from a deal flow perspective. We're sector agnostic. We're seed and Series A focused, and have backed in the US early stage companies like Flutterwave. We were seed in Flutterwave, which is a YC company that's now a unicorn. We were Series A investors in Current, which is a neobank that received funding from Tiger Global recently in the Series C, and many others. So we've been very also active Y Combinator investors, hence spending all day yesterday on demo day. I have to admit, Iba, it's extremely painful finding great companies out of the sea of all amazing entrepreneurs. When we attended Demo Day in 2015 and 2016, companies that were really interesting really stood out. But today they make it considerably harder for us with 300 companies in the class. In addition to all this, I'm an active angel investor in the region. So I was a seed investor in Thunder, which is a Robinhood for Egypt. I was a pre-Series B investor in Highland, which is building a super app in Egypt. And I'm actually going to be doing Daira out of the recent Y Combinator class, back Omar Ikram and that business. So I've definitely Bit Oasis, so seed investor in Bit Oasis with Ola. So I've been dabbling personally in my personal portfolio in the region because, again, I can see that there's been a massive shift over the last 4 to 5 years. And one, quality of entrepreneurs has gone up, funding has improved, the ecosystem is slowly but surely maturing, which really is persuading me to punt, at least from a personal perspective, in deals in the region. So that's my quick and dirty.
I love it. And I love that you are putting your personal money on the table to support the region, which is phenomenal.
Absolutely.
Ahmed, I think we have you back.
Sorry, can you hear me well?
Yeah, phenomenal.
Yeah, great. Sorry for this mess.
Well, okay, technology.
I have an urgent family issue, but now I'm settled.
Yeah. So can you tell us a little bit about your story and Foodics for the audience?
Yeah, Foodics, me and my co-founder, Musab Al-Uthmani, founded the company back in 2014 in Khobar, Eastern Prophet in Saudi Arabia. The company is cloud-based point of sale, serving the retail and the F&B sector. We are providing and restaurant management system with inventory management and trying to complete the ecosystem with integrating with the food delivery companies, with the customer engagement companies and platform. Since we founded the company in Khobar in 2014, we expanded to Riyadh and Jeddah and to Dubai in 2017, and we launched officially in Egypt in 2020. And then COVID has been appear, and we delay some of our acquisition operation in Egypt. And luckily, we announced heavily that we are starting our operations back in Egypt this year.
Mabruk. That's phenomenal.
Thank you very much.
So I'll start with the founders in the room, so Tara and Ahmed, and then I'll actually move to the investors, Ahmed and Omar. So first, Tara and Ahmed, you obviously have your idea and you have to raise money. You have to raise capital for this. How did you go about pitching? Like, did you think about strategically picking or knocking on certain investor doors? Or was it that you were just trying to go out and get insight from a bunch of different potential investors? Like, can you explain that process? How did that reaction? Did you get a bunch of yeses? Maybe you got a bunch of no's. Would love to kind of hear that sort of journey. And maybe I'll start with Tara, Ibad Tara.
Yeah, you'd actually be how many investors email us cold and they're like, "Hi, Tara," and I'm like, it's Ibad. Come on. So, but okay. So it's actually a funny story. So when we went through YC and post YC, we actually went through a couple of pivots. So in fact, even when Arab Angel invested, and even when Omar came to the table during our seed, we actually had a very different idea. But the thesis of the idea has still remained the same, which was we believe source control, which is Git, is really the beating heart for developers and even for development in general, in terms of where development takes place. And so our idea evolved quite a bit over the last few years. And I think YC also has this thesis that they really invest in the founders. Mm-hmm. They don't because they know that your idea will evolve. And interestingly enough, so many of the companies, even that went through our batch, their ideas evolved and changed so much over the course of a few years. I think the main thing is, as long as you persevere and have the grit and the persistence to keep going and keep iterating, that's really key. So at least for us, what happened was right after YC, we actually only raised like 200K. I remember it was, we raised very little money. We had just gotten I think it was 6 angels to the table. And so all we did was we just went back to work. So this was 2015. We had just moved to America. And so we were just basically still getting the lay of the land, trying to figure out our visas. And so, we were kind of fresh to the country, but we kept going. And I think what happened was we really understood our market, our target segment. And this was why I also think, it may look like an overnight success, that it's, in 8 months to get from 20 customers to 6,000 plus. But I feel like what really happened was we spent so many years iterating on the idea and and consistently, understanding what are developers, engineering teams, product managers, and their pain points. So what happened was our early angels, actually, and I remember our first angel was Hamid Barkhordar. He was an early angel in Dropbox, in Etsy, and I mean, just several of the hits from Etsy.
Some names we've heard of, maybe.
Yeah, and and so he was actually part of the Iranian mafia. And what happened was in 2000. So Tara is our second company. Our first company was Gradberry. It was basically a careers platform for students and fresh graduates in the Middle East. And so for that, we didn't raise any money. But what happened was Hamid actually met, I got introduced to Hamid through a distributor partner for Gradberry. And he met me and he's like, oh, your idea is too small. You need to think bigger. Like I'm investing in companies in Silicon Valley. And, and I was amazed because I had just seen The Social Network with Aaron Sorkin movie. And obviously I'd been like obsessed with Bill Gates from a young age. And so, I mean, our end goal for me and Sayed was always to move to Silicon Valley, but we thought it would happen much later in our careers. Like we thought we would, like my plan was to just, do the investment banking. I was already at McKinsey and just kind of go through that route. But we decided to, when we moved to Silicon Valley, Hamid, as soon as we got into YC in 2015, and by the way, we were rejected twice before, and finally we were accepted.
A common story.
Yeah. And so when we got accepted, he was before we even got accepted, he gave me, so I didn't have enough money to fly out to San Francisco. And he's like, okay, here is $2,000, figure out how to get the other $2,000. And I did through revenue. And so with $4,000, I was able to get a ticket, get a stay and all of that. And the first time I came here, I was like, okay, this is where I want to be. This was, I want to say 2013. So he became the first angel investor, and we also raised. We also had some money from MIT. So MIT was a 10K check. It was a research grant. So for a lot of the early money was through research grants, then angels, and then eventually we ended up raising a $3 million seed and a $10 million Series A. But in terms of the journey, I think it wasn't so linear. I feel like there were so many points along the way that led us to where we are. But what's really interesting, I think, is that it took us 4 years to raise our seed and 9 days to raise our Series A. I feel like that is such a dichotomy, and every time we think about it and I reflect back on this, I'm like, it's just so different and so odd, like in terms of the difference there. And I'm happy to go into more detail, but
it's phenomenal that you share that. Let me actually go to Omar to contrast, and then Ahmed, I'll go to you next. And I know we lost Ahmed at Foodics. So Omar, from your perspective, right, you kind of joked that, the Y Combinator batches have grown. It's a little bit harder to find the diamonds in the rough. Although as an operator, I don't know how I feel about that, as you said, as an investor, but would love your perspective on just kind of, what do you think of, how did you meet Iba and Tara and sort of that angle?
Sure. I actually got introduced to Iba through my partner Saud, who Iba, if you remember, you either met him in the UAE, either in one of your trips back, or through another mutual friend. But we got introduced, and
actually the trip through Gary Bankman, I think.
That's right, Gary. I don't know if Gary's attending Techwadi, but here's a shout out to Gary. So he'll.
Gary's an awesome connector.
Yeah, exactly. And we in fact did a couple more deals with Gary. So Gary's a great venture partner of ours. He's based in Dubai. But I think, Hassan, to your question, what really stood out with Iba and Tara, and you can tell from her journey, is just the unbelievable amount of grit. Frankly, the reason why I nominated Iba to this panel as one of my portfolio companies amongst now 90 companies or 85 companies that we have is she has a very unique story growing up in the region. And at the time, obviously, the venture capital markets were really immature, right? It was very, very tough to go out in the early sort of 2010, 2011, 2012, 2013 to go in and raise 50K from a single investor and 4 others to build a company. Mm-hmm. So the fact that, Gradberry initially was born in the GCC, but then gave birth to Tara in Silicon Valley. And after Iba decided to leave the Middle East and go build her company in Silicon Valley, I think that story for us was just frankly unbelievable. And to her point, we participated in the 3 million seed round. We were then blown away by the speed as to which she raised her Series A with multiple term sheets. And she ended up taking a term sheet from Aspect Ventures, which we're super excited about. Slack is invested. And, for us, having, gone through the gamut with a ton of other companies in that way, I can tell you 9 days to raise an A is record. But two, to have this, unbelievable amount of interest, given how topical what they're building is from a productivity tool perspective, was for us just a no-brainer. Secondly, we love women entrepreneurs, right? So we have today, like I said, a portfolio of 90 companies. 25 companies are either minority or women founded, right? Which is a disproportionately large number to most other VCs in the Valley. And funnily enough, that happened organically. We, by virtue of being Egyptian, aren't too many Egyptians in Silicon Valley. I probably know them all. Right? But my entire investment thesis has been anti-homophily, right? Because I can't find other people like me to invest in because there are not too many Egyptians. So for me, finding anybody who is dramatically different than me as a founder, right? And someone who's brings massive value out to the table was really the name of the game. And that ended up being backing a ton of women across our two funds. So we were, one, super excited about that. Two, we were super excited that Iba came from the region, understands the region, but came and built a business in Silicon Valley after obviously the region showed some challenges early on in her journey. And then for me, some of the most compelling and some of the most, I guess, the strongest characteristics a founder can really show to a potential VC is their ability to pivot multiple times and to be able to pivot successfully. That is, I think, a recognition that only a handful of founders are able to claim. And in Iba's case, this is something that she can claim. So there's so many things that she and Tara and the team and Said and everybody have been able to constantly jump in terms of hurdles and break barriers. And that for us, at a minimum, when you're backing teams early on in the life cycle of the businesses, that for us is a huge protagonist in our ability to continue investing and our assessment of whether a company is going to be successful or not. So, kudos to Iba and the team and Tara for doing that. And we're super excited for the rest of the journey.
Love it. And thanks for sharing that, Omar. So Ahmed, same thing. Ahmed, I'll start with Ahmed at Foodics. Tara, and we learned about the Tara journey with Iba kind of highlighting sort of the pivots and the no's along the way. For Foodics, would love to kind of hear that story. And then Ahmed at STV, I'll ask you the same question, Omar, as well.
Thank you. Actually, my experience in fundraising started back in 2015 when I met Omar al-Majdoui. So I think back in 2018 the venture capital market wasn't that mature, and actually the infrastructure even was not ready. Comparing to what we have today, the market is super mature and everything is really stable. Our first seed investment we have from Ra'id Venture. It was $250,000.
Great fun.
And then we followed with the Series A, $4 million in 2017. Led by Ra'id and RTF. Of course, as Lara said, that most of the investors invest in the founders. So my experience actually at the beginning, investors was really investing actually in the founder, me and my co-founder Musab. And my experience eventually when STV came and led the Series B round, they was focusing more on the second, level of the team. So they focus on the CEO, the CFO, the other talents in the team. Of course, the founder was really important, but Series B actually is different than Series A.
Yep.
MashaAllah, يعني also the round of this, the size of the round as well. But definitely, I consider really STV one of the really added value to the companies and to the ecosystem as well. As a Series B now, it's really a growth stage, and all what you think of the exit strategy and what is the next level you can focus on. Of course, the investors at the first in Series A or even seed stage, it's all about proving the product market fit and proving the market you are in, and even shaping your TAM as well. بعدين in Series B, the story is different. The story is all about growth, market dominancy, expansion to a new markets. And every chapter of the startup needs the venture capital. They are for the same let's say chapter of the company. يعني we have also Naeem Ishaq sitting in our board. Naeem is ex Square. He was the financial director at Square, and before Square, he was in Salesforce, even head of finance, and now he's the CFO of Checker. So yeah, يعني now our board and investors are really for the current let's say stage of the company.
Yeah, and I love that you talked about sort of building up that support network, whether that's through your investors or your board. And so, Ahmed, I'll turn it over to you at STV. You obviously invested in Foodics. We'd love your perspective on sort of how do you think about investing, and why did you invest in Foodics, and sort of what attracted you on from your side of the table?
Absolutely. So there's a lot to be said about Ahmed's story and Foodics. Number one, it's a B2B company that is high growth and is being exported out of the country and out of the region. We don't see that often. And to us, at least to me personally, I think describing Foodics as a point of sale could be an understatement or simplification. The way we justified the investment thesis is that this is critical infrastructure for SMEs. If you know any SME in retail, whether it's food and beverage or not, they rely on their POS, and if it's not working, then work is not working.
Yeah.
When you put it that way, and then when you also couple it with the fact that it falls at such a unique place in the value chain, where a point of sale is exposed to customer data, as well as inventory, supply chain, and in terms of collecting data, this is absolutely the best way for getting into fintech, which Foodics is into through Ahmed's vision, getting into inventory and being a marketplace, a distributor of digital product, which is also part of Ahmed's vision. So that's how we look at that opportunity. We've known Ahmed for a very, very long time. He's been in our office for many times. Alhamdulillah, we were extremely lucky when in that last round, there was commitment from everyone around the table, including the venture arm, Sanab, the venture arm of PIF. So a huge milestone for everyone, for the ecosystem, as well as for the Foodics team, and it's just like upwards and onwards, inshallah. So what's the next milestone there is exporting that product to other markets, and proving the B2B story further. I think if you look at our portfolio and probably the portfolio of so many other VCs in the region, most of the successes have been in B2C. And then there is only so much opportunities in B2B where you can create a technology giant. I think the story of Foodics is a really great example of showing you a playbook of how to go about that.
Yeah, I love you talk about that. We had Roberto from Microsoft MENA, Microsoft Startups for MENA yesterday. Some of you may know him, and this concept of B2B came up as sort of underdeveloped relatively in MENA. When in fact, if you look at Silicon Valley, there's way more, I would argue, B2B, and it's way easier to have an exit in a B2B market. I'm at Facebook. I can tell you, consumer is hard. Another thing that just came up that's been sort of hinted at across all of the conversations here is about the value that investors bring or the value that board members bring. So Ahmed, I'll turn it back to you. Then I want to go to Omar, and then Iba and Ahmed at Foodics. From a VC angle, a lot of times VCs obviously bring capital. And there's always sort of the buzzwords on every VC website about, well, we do value added services as well on top of the capital. So, sometimes people will dismiss that and say, well, that's empty words. They don't really do much. So, Ahmed at STV, Omar, would love your perspectives on this. How do you think about it from a VC angle? And then I'll go to Iba and Ahmed at Foodics next to think about, what support do you look for from the investors post getting the capital?
Of course.
Please go ahead if you want. You can start. I'll
do a quick one. So we do believe that we're active investors, and any VC should be active investors. Not only have a role in the board, but ideally have a role in L1 and L2 and country. Whatever would move the needle, they should be there. So the areas we try to focus on is, number one, on the board as our position, as well as helping in hiring independent board members. This would be a really great stage to talk more about independent board members and how they can help companies in the region. So Naeem Ishaq is helping us on Foodics, and we have Amr Awadallah helping us on Uniphonic, another portfolio company I'm part of. And we need more of those folks on our companies. So on the board level, and then helping on hiring, on lobbying regulators and KPI settings and business development. And the one thing you need to keep in mind is, what kind of value should you expect from VCs versus strategics? VCs will not go and just open assets for you to go and, here's a lot of business that we own. Because if that's exactly what you're looking for, then that is more like a sales transaction. You should go to either sales or get money from a strategic. But VCs, especially institutional VCs, is more long-term oriented, helping you. We'll talk to you more about hiring than immediate sales. We'll talk to you more about strategy setting. We'll connect you to advisors and experts. And that's what you should hold them accountable to. Ideally, and same thing from the company side, you should be open to hearing their advice. Ideally, they're valuable. If not, just shut them down. You totally have the right to do so. But that is what you would expect from a VC, as a comprehensive feedback loop on few dimensions.
Love it. Omar, what's your take?
Yeah, so Hussam, when we initially launched our first fund, Arab Angel, we modeled on SV Angel, right? So we took Ron Conway's model. Ron Conway in the 90s obviously raised hundreds of millions of dollars from over 500 limited partners. And anybody hearing that number today would be completely flabbergasted. Let alone trying to deal with 10 or 20 LPs. But the idea is, to Ahmed's point, we launched the first GP LP structure comprised of 65 family offices in the GCC, high net worth individuals and family offices. We had no institutions in our first fund. And we purposely took and had minimum check sizes in our first fund that were very low, so that we that the product is palatable for most of the investors we were speaking to. Most of these family offices and high net worth individuals in the GCC had never done anything in venture before. So for them, this was their first foray into venture. So on the one hand, we worked very hard to build a sort of a portfolio of limited partners in our first fund, so that I'm able to market in the US a one-stop shop comprised of ministers, ambassadors, C-level executives, board-level members in notable institutions across the region, venture capitalists from the region, et cetera, to founders in the US and tell them, hey, you're trying to build a global business. It would be very foolish for you as a founder to overlook the Middle East, North Africa region as a market for commercialization and business development, right? We know that you are busy, very busy trying to go from San Francisco to Los Angeles to New York. So the value add that we're offering is one, optionality on the MENA region. So you're able to pick up the phone to myself, to my partner Kyle, my partner Saud, and say, hey, we're an edtech company. Can you guys connect me with the various stakeholders in the education system in the UAE? We're like, absolutely we can, because the Minister of Higher Education happens to be a limited partner. And this is a real example, right? So we had a company called Portfolium, San Diego based. We came into their Series A, we were the last check-in, and we introduced Adam Markowitz to Dr. Ahmed Bilhol at the time, the Minister of Higher Education. And then he rolled out Portfolium, which think of it as LinkedIn, but for high school students that then, moves along with you throughout your college and professional career. Yeah, introduced him to the minister, and all of a sudden this gets rolled out in a handful of institutions, academic institutions in the GCC. So this is the kind of sort of very low friction business development value add that we can offer in the early stages of the life cycle of some of these businesses. It is by no means a prerequisite, but it's definitely differentiated enough to have gained us allocation in highly competitive deals. And I'll give you another example. We backed a company called Even Financial in New York, early 2017. This was your run-of-the-mill 11 pre-money. They were raising $2 million. Canaan, conversion capital, social leverage, Layer Hippo, all involved in the deal. And all of a sudden, the new kids on the block at the time, Arab Angel, right? And, for anyone looking at this cap table or scratching their head, they're like, how did these guys, who are these guys, first of all? Two, why are these guys on the cap table? And the founder, Phil, can tell you, these are the guys that came in with highly differentiated value add. They have 6 chairmen of banks from the region as limited partners. The LHVs and the Canaans and the social leverages of the world are going to be able to offer me access to UBS and Goldman and JP Morgan, et cetera, but who's going to make an introduction potentially to First Abu Dhabi Bank or First Energy Bank of Bahrain or National Bank of Kuwait, right? So that optionality, and again, it's an option and not an obligation to access the region, but that optionality resonated exceptionally well for founders in the region. And continues to resonate very, very well. The second sort of value add that we can offer, and this might sound commoditized, but we're a capital partner. And when I say we're a capital partner, we'll write you a $400,000 to $500,000 check at the seed or Series A, but we leverage our limited partner base and our highly extensive GP network, having now co-invested with over 750 different entities, 45 of which are $1 billion AUM VCs in the US. We're able at a minimum to introduce our companies to potential investors that could lead their rounds of financing in future rounds, right? We've done a lot of SPV syndication from our limited partners as well. Out of our first fund, which was $25 million, we offered our limited partners in the GCC $20 million worth of co-invest opportunities, of which about $8 million were utilized. So a lot of founders see us as a capital partner, not just that we wrote them a check and, hey, good luck to you, but that we wrote them a check, we write them another check in a future round of financing, but we also help bring other counterparties to the table to potentially invest in their businesses. And one final anecdote that I'll mention, again, around Even Financial, is that we introduced the founder to Great Point Ventures, a $300 million fund run by Ray Lane, the former CIO of Oracle in the Valley. And he co-led his $20 million Series A with Goldman Sachs. That was 100% on the back of our introduction. They had never heard of Even Financial. I looked at our portfolio, loved the company, and raised a round. This had nothing to do with the Middle East, but just by virtue of being a very sort of high level value add capital partner and connector to various counterparties, VCs, to family offices, and syndicating capital from limited partners, that tends to resonate exceptionally well for founders. And we do this all outside of the board. We don't take board seats. We don't kind of get our hands and feet dirty. What we like to do is be a very friendly partner outside of the board and really add a ton of value, sort of, as they say, kind of off the official books.
Love it. So I'll flip it now to the company perspective, right? The founder side. So Eba, I'll start with you. You've talked about these different raises you've done. How did you think about the value add that these investors can add beyond just capital? I mean, you even talked about your great story with this is called part of the Persian mafia, the Iranian mafia. I forget the name of the gentleman. Yeah, Habib. But like, sort of, you just started your story from the fact that yes, value is being created from the first get-go beyond just I'm giving you a check of money. So like, how do you think about that on your side? What have you seen?
Two parts to this equation, right? One part is that you have to be in the fortunate position to be able to select who to work with. And I think that's one piece of it. And if you are in the fortunate position that we were, I think for us, we tried to optimize for two things. One was operator experience. And I think Ahmed Al-Naimi, I know you alluded to that as well, which was, how do you bring operators to the table that can basically kind of unlock parts of your, whether it's your distribution, whether it's the way you think about your product strategy. So even for us, like when we did our seed, we had like Sam Hodges, who was the founder CEO of Funders Club, eventually now is founded Vouch Insurance. We had Jan Thelen, who was the founder of one of the early founding team members of Skype, and then Dan Eisner, who was one of the co-founders of Waze. So I feel like for us at least, I think bringing those people to the table in our seed round, I thought was instrumental. But the other piece of it also, and then with our Series A, what ended up happening was that we really wanted to work with a fund that was actually, we looked at it as a dichotomy so we're targeting developers and our primary distribution strategy is bottoms up. So there were two things that I knew we wanted. One was we wanted a lead that could approach it not only from the enterprise angle, but from the consumer angle as well, because our adoption strategy is very similar to Slack. A workspace gets created, an individual developer adds 5 developers, adds their engineering manager, adds the product manager, and that's how you get to a team of 50 plus people on the platform. And we don't have anyone in sales, in marketing. There's the entire team of 26 people is all product engineering and design. And so we knew that for these, even for our Series A, we knew we wanted someone that had done some enterprise investments, but understood that this consumer momentum and movement that happens in product-led growth in particular. And so there were two variables here. One was, from a lead perspective, there were very few people that we could work with. And I think, Aspect, now known as Accrue, so they are, they're just over, now they're going to be over a $600 million fund. But for them, I think what I really liked about Lauren was they led the round in Chime. And Chime now, it's a huge unicorn, but I feel like they really have conviction around these enterprise, actual B2B enterprise companies, but they operate and are designed like consumer companies. And so I felt that, so our Series A was a pretty competitive process. Like we had several term sheets on the table. And what I knew was that working with a boutique fund, so something that's smaller than a $5 billion fund, could, Aspect at the time was a boutique fund. Now it's known as Accrue. But basically the idea there was, could they actually, work with us? And Lauren was a product manager at Google as well. And so I feel like she uniquely understood the problem that we were also trying to solve. So that was one part of it. Now, the second part was I also knew we wanted a strategic VC. And so a strategic investment in the Series A. At the time, we were thinking Microsoft, but then when Slack came to the table, it was just a no-brainer for us when we met with Jason and Dylan. And so and actually this morning, our Slack app just went live to the directory. And we've been working with them over the last 8 months for our Slack app, which has now been, requested by thousands of engineers on our platform. So we knew we wanted to work with Slack. What we've really been able to unlock is, understanding distribution, understanding product-led growth. They've made introductions to early product folks on their team, and really helped us understand our metrics as well. Because we were at one point we were growing, we were adding 1,000 engineers every 2 days, and so we had no idea what was going on. And even through what's really interesting is someone also alluded to the fact that. Omar alluded to the fact that, you can have customers in the Middle East and not to overlook the Middle East market. So out of the 6,000 organizations that are on the platform, just over 100 are based, we already have over 100 customers in the Middle East region, including Noon. And again, all of this has happened, complete bottoms-up product-led growth. I've never met anyone on the Noon team. So it's really interesting that we've seen this kind of adoption and word-of-mouth growth. And a lot of it really came from strategically thinking through who we wanted to work with. And we actually even, we've been so specific that we've even been able to forego valuation to work with the right person or to work with the right team. And I think, for us at least, the other thing actually I just wanted to add as well as a piece of advice to founders is make sure you write detailed investor updates. So I feel like one of the other things that really helps is for investors to know what are the challenges that you're going through, what are the opportunities. I've been told that I sometimes tend to write like a novella in my investor updates, but I really enjoy giving that level of context, because the thing is that it actually enables people to help you. So if they know exactly what's going on, how you're thinking about the team, whether it's new hires, even I remember when we were courting some significant, so a lot of our team has been in early engineering at Google and Apple. And we knew we wanted to hire from consumer backgrounds. And so our investors were actually instrumental in getting us some of those introductions, even hopping on recruiting calls. Since obviously, for some of these engineers and even for our head of product, they're leaving millions of dollars in stock options on the table at some of these larger companies. So I think picking and choosing your investors wisely, if you have the opportunity to do so, but even if you don't, I really believe that sending detailed investor updates is really helpful, because it keeps you top of mind in your investor network.
And then they can help. I love it. And thank you.
Keep bringing them over. We love to get your updates. So, and keep them as long as you'd like. We definitely prefer more than less.
Awesome.
Yeah, I think that's, just for the audience, I think that's a piece of advice that we always hear, is that founders definitely write those updates, and investors love it. Ahmed, I'll go back to you. I mean, you started this. You talked a little bit from a Foodics perspective. You talked about Raw Ventures coming in and supporting. You talked about Ahmed and the STV team supporting. You talked about Naeem joining on the board for Foodics. Again, did that process happen organically, a little bit by accident? Was it intentional? Would love your take.
Sure. Actually, it's a completely different experience when I raise Series A and even the seed and the Series B. The most excitement lately journey or experience I have experienced is Series B, the latest one. Actually, it is typically sales. I wear the hat as the salesman, but I'm pitching for the investors. Of course, I know that if I will end up with STV, but I'd like to do more shopping, and I'm lucky that I start talking to 42 investors, actually, local and international. In 2000, actually in March, in March last year, the beginning of the pandemic, I was in California pitching to two large VCs, and actually the funny story here that I never met them personally. Over Zoom, and they are next door, by the way. And I took the hotel that they are really next to their office, but the pandemic was at that time.
Over here.
So yeah, and actually يعني it's really interested that we show and STV knows that يعني we show interesting and offers and receive offers from international VCs, and also we are expecting them for the next round, even Series C. يعني attracting, feeling the attraction from our company growth in the valley and the global VCs is really giving us more confident that we are really scaling in the right direction, and talking to 42 investors and sending them the updates as Ira mentioned, and doing all of the operation question and due diligence. It's really understanding how the investors and preparing the company even for the next level of next round.
Yep, love it. We are coming up on time, so I want to do just a very quick around the room, 30 seconds each individual. We have a lot of people in the room who are either aspiring founders or founders, so this will probably be for Iba and Ahmed, or B, investors who are interested in investing in MENA, whether at the angel level or later. So we'd love to just go around the room. What piece of advice do you have for the crowd? And I'll start I'll go Iba, Omar, Ahmed. So I'm just literally just picking who's on the screen in front of me. So Iba first, 30 seconds, just any advice. I know you've already peppered in a couple pieces of advice, but any thoughts that you'd love to share that would be helpful for the crowd, and also just Tara as well.
Yeah, 30 seconds. Let's go. So be opinionated about your business. I think one of the things that we found is really powerful is once we had a set of opinions that we believed was the manifesto for the company, and we built the company on those founding principles, so much became clear in terms of from a clarity perspective. So I think what tends to happen in the early days is you get a lot of conflicting advice from whether it's advisors or investors around you, and I think you need to be extremely opinionated about your business and about your product in general. And so for us, adhering to some principles of simplicity, we keep things simple to a fault almost, and that shows in our product as well. So I think being opinionated is really, really important, and then sticking to those core set of opinions as you go.
Love it. Omar.
So very quickly, just more broadly on breaking into VC. And I think there's a lot of sort of myths that need to be debunked. One, every other person you're going to meet in VC is going to have a very, very different background and very different journey getting into venture, right? There is obviously the story of founder turned VC after selling a business for 100 million. There's the ex-Google, there's the ex-Microsoft, there's also the ex-Sequoia or ex-Kleiner that are raising their own funds. But I came from a very different world. I was doing corporate finance, but I started off, and this is kind of my one suggestion, is it's very important if you want to break into this industry to start investing, frankly. This is the way to do it. People take you a lot more seriously when you actually write checks, even if they're small checks, angel checks in the US or the MENA region. Because once they know that you write checks, then those founders you back will recommend you to other founders, and then a network effect can grow, right? And then more generally, for those sort of considering the MENA region as a place to invest, I think today is probably the most exciting time in the region, and has been in the based off of the last 10 years. There's a lot more maturity. There's a lot more liquidity. The founder quality has gone up tremendously. Really, the fabric of the ecosystem has improved dramatically, and that has, even though I focus entirely on investing in the US, that has pushed me to write personal checks into companies in the MENA region, and proud to consistently see Egyptian companies come through YC and other sort of GCC countries. So very, very quickly, invest even small checks, and rest assured that every single person's path into VC is very, very different.
Love it. Ahmed, STV.
So on my side, I'll try to make this quick. I think I have two messages. One is definitely invest. Like Amr said, it's whether it's small checks and or if you're an LP and fund a fund, please do consider GPs in the region. The part of this reasoning is we're going very long on the region, and we're seeing things where things are today is very dramatically better than where they were 2 years ago, and 10 times more true for where they were 2 years before. So in 2018, I think we saw $50 million being invested in startups in Saudi Arabia alone, and you know, more of that amount is in UAE, and then a little in Egypt, etc. So 2018 it was 50 in Saudi, and we predicted that by 2025 it will reach $500 million in a single year. I can tell you that since that prediction, we have exceeded every year's forecast. Wow. 2018, 19, 20, and inshallah 2021. We're not there yet. So it's inshallah, and it's a winner by betting on the region. There's a lot of value to be captured. That's number one. Number two, and this is me begging the folks listening, especially those in Silicon Valley. We need you. Either we need you in person, or we need you as part of a board or a technical advisory committee or any sort of advisory committee. I guarantee there will be a lot of mutual value to be gained, and this is how you build ecosystems. This is how ecosystems in Israel and Latin America and Asia were built. It's exactly by bringing folks in Silicon Valley, having them build and contribute back to our region. And if you're looking for roles or opportunities of that sort, please reach out to me, anaimi@stv.vc, or just like info@stv.vc, and we'll look for the right opportunity for the right profile. Thanks.
Awesome. Thank you, Ahmed. And Ahmed at Foodics, last but not least.
Yes. Again, trusting your gut, but you really want to invest more of your time before taking any decisions and consult. In my personal experience, when I joined and been selected by Endeavor Global, the type of SaaS companies in the region is really rare, and it's all about reading more cases in the region and compare it with the same scenarios happen and same companies in the California and the Valley. So it's really helpful, and the same challenges, the same issues is really exactly the same. So the more you consult, the more you ask, the more you have an advisory board or advisors, is really end up with the right decision. I'm highly recommend that you don't need to only trust your gut, but you really want to ask and ask and consult. This is what.
And I love, I think that's a phenomenal way to end this, because you're saying ask questions, be humble. I think it's so true, and I love it. So a big thank you to all of you for joining us today. I feel like we could have gone for another hour. I know it's busy, and I know there was some questions in the audience as well. So hopefully people can connect offline. Appreciate all of you joining us, and thank you so much. And for those in the audience, I think we have our last two panels. There's one about Palestine and one about Silicon Valley MENA founder stories. So thank you again to everybody, both our panelists and our viewers. Take care.
Thanks, Hossam. Thanks, everybody.
Thank you, everyone.
Thank you. Bye-bye.